Hey, a common misconception is when you can go ahead and deduct a business expense. Sometimes taxpayers think, hey, you know what? It's a business expense. I'm automatically going to be able to deduct it because I'm using this for my business. And if you watch different types of social media, you're going to see that they're claiming all kinds of different business expenses out there. Not all channels, but many channels will claim all kinds of business expenses out there. And a lot of times that's just not accurate. So what we really have to understand is the IRS gets to decide whether you get to deduct that expense or not, right? Because we know, first off, from the IRS, the code, it says we have to include income from all sources derived, but then expenses are basically legislative grace. So we have to think, what does the IRS consider when they're trying to determine whether you can take a business expense or not? And what you're dealing with are you're allowed to take ordinary and necessary business expenses. Now, we need to understand what an ordinary and necessary business expense is so that way we can understand whether we can take the deductions for our business or not. So my name is Brian Winrow. I'm a tax attorney and tax professor, and I'm going to walk you through the process on how the IRS decides whether you can actually deduct that expense. So let's go ahead and get started, and let's start looking at that ordinary and necessary business expense. All right, so this is the starting place that the IRS looks to determine whether you're going to be able to deduct those expenses for your business. They have to be ordinary, necessary, and used in business. So it has to be an ordinary and necessary business expense. That's the terminology the IRS looks at. So when you're looking at ordinary, it has to be common. It has to be a common expense that's used in your business. Necessary is going to be helpful. So it has to be a common, helpful expense used in your industry. Now, I have another video out there that talks about ordinary and necessary specifically. And what I do is I use some of the extreme cases out there to kind of test where it really is, what the IRS is looking at. So I found some unique cases that were kind of interesting cases, such as a person who's trying to deduct the cost of clothing. They work in a high-end clothing boutique and they have to wear that specific clothing, designer clothing, but they would never wear it outside of their office. IRS said that's not going to be deductible because that has a personal use to it. Another one is a person who is an exotic dancer. She goes by the name Chesty Love, and she gets a breast augmentation all the way up to double N's. And she decides, hey, I'm going to deduct or depreciate the cost of these augmentations. And each augmentation weighs 10 pounds. And she's going to go ahead and deduct those costs. And the IRS says, you know what? You can't, or the IRS says you can't deduct it. The court stepped in and said, yeah, that's an ordinary and necessary business expense. Another one was, sorry about that, a person who wanted to deduct cat food because they owned a salvage yard and they were using the cat food to attract cats for rodent control. IRS said yes on that. And then a person who went ahead and they're writing a book and they want to develop their characters for the book, so they start frequenting brothels, and they want to deduct the cost of their brothel visits. And the court said, hey, it's ordinary and necessary, but they didn't let them deduct that because it's too personal in nature. So kind of some unique cases. You might want to take a look at that to get a better understanding of ordinary and necessary. Now, it also has to be used for business purposes. So if it's going to be something that's going to be non-personal, then if it's going to be something that's used personal, then you're not going to be able to deduct it. So groceries, for example, you wouldn't be able to deduct your groceries, right? Your entertainment, that's not going to be a business use. That's going to be something you can't deduct it. As a matter of fact, we're never able to deduct entertainment expenses, even if it was for a business purpose. It's really hard to ever be able to deduct that. So it has to have a business use in order for us to be able to deduct it. So travel, if we're just traveling somewhere it's going to have a little bit of a business use, but primarily it's a vacation for us. We're not going to be able to deduct that. But if we're going to see clients, that could be a deductible expense. So what does the IRS do when they're trying to figure out ordinary and necessary business expense? They look at things like, hey, did you keep records? How are you using this asset or this item that you purchased, right? Are you using it for your business? Is that what the purpose of it is? Again, the receipts, are you keeping that? Are you treating it like a business expense for you? So it wants to make sure that it's being treated in that capacity. Did you, how long have you had it? Do you use it frequently? Those types of things. So let's go ahead and continue with what it is that the IRS is looking at and what kind of documentation you might want. Okay, so here's what the IRS is looking at when they're trying to determine whether it's ordinary and necessary. So the first one is going to be, what is the purpose for it? Is it business or is it personal? If it has a mixed use, you can't deduct the personal part. So you would not be able to deduct that. So the IRS cares whether you're using it for business or personal. Personal, not going to be deductible. Documentation. The IRS wants to make sure you have documentation that you're actually treating this as a business expense, both from the purchase price and how and why you are using it. So keep receipts and keep logs. Give them that documentation. When you're running a business, you need to treat it like a business, and documentation is extremely important to do. You need to be documenting everything. So that way, if the IRS comes and audits you, you're going to be able to say, hey, no, look, this was a business expense. The next one is going to be frequency. How frequently do you use this asset that you're using as a business expense? Is it a one-time purchase and you never touched it again? Or is it something that you're using regularly in furtherance of your business, right? So that's another thing that they evaluate. And then finally, the reasonableness. So does it fit your industry? Is it something that you would expect to see kind of in that industry? Does it advance your business within that industry? So is it common and is it helpful? So as we're looking at ordinary and necessary business expenses, remember, common and helpful is being used as our guiding principles on this. Okay, so this kind of talks about the same thing. So again, the IRS cares about if it's ordinary, so common for your work, necessary, is it helpful, is it generating income, is it used to generate that income? So if it's necessary, that is what they're looking for. Is it personal? We know it has to be ordinary, necessary business. So if it's personal, no, we're not going to be able to deduct personal expenses. And if it is personal and business, the personal is going to reduce your deduction on that. And then finally, are you documenting it? So make sure you have the records that support your claim. That is the biggest area that I see taxpayers making, is they don't have the documents for it. So it's really hard to be able to claim, hey, here's the business purpose, here's how I'm using it, here's why I'm using it, here's how frequently I'm using it, if they're not keeping those documents. So you want to make sure you're keeping those documents as you go through the process. All right, so let me go ahead and give you a checklist that will help you as you start to determine, hey, is this going to be something that I can deduct or not? All right, so as you've noticed, a recurring theme throughout this process, here's your checklist. Is it ordinary within your industry? Make sure that it's ordinary within your industry. If it's no, you cannot use it. Necessary for business activity. So is it helpful? Is it helping us incur income? Is it something that is helpful for our business? If yes, hey, that's another factor in favor of being able to claim it as a business expense. Is it a business use, right? Remember, if it's personal use, we don't get to deduct it. So when I told you about the manager of the high-end clothing boutique who has to wear designer clothes, what the IRS said is, listen, designer clothes are things that you can wear outside of work. Even if it doesn't coexist with your lifestyle, it's still something that can be worn outside of work. So we're not going to allow you to deduct that expense. So she was unable to deduct the expense for that designer clothes. So it has to primarily have a business use, not personal or disallowed by law. So disallowed by law is going to be something like entertainment expenses. We just cannot deduct entertainment expenses any longer. Business meals are limited to 50%. Those types of things. So it can't be personal, and it can't be allowed by law. And then finally, it has to be well documented. Maintain those records, maintain those receipts. If you have a CPA or a tax preparer, they're going to be telling you that all the time. Keep those receipts, keep those documentations, because you're going to need it in order to justify that expense if the IRS goes ahead and audits you. Because remember, the IRS is the one who's going to decide whether it's going to be ordinary and necessary business expense. While they're going to make their claim, you can always take it to court, but that can be pretty expensive to take that route as well. All right, hey, if this video has been helpful, go ahead and subscribe to this channel. The next steps that you should be looking at, by the way, is you're now at a place that you should be looking at a complete walkthrough. So you should jump over and you should do your first walkthrough. That walkthrough is going to take you from your 1099, and I have a W-2 with it. So I give you an intake form with a W-2, 1099. You're going to take that information, and now what you're going to do is you're going to be applying it with that 1099 over to your Schedule C to your Schedule SC, to your Schedule 2, to your Schedule 1, all the way over to your 1040. And with the W-2 income, it goes directly into your 1040. So you're going to see how it all relates together. So that's your next course of action. All right. Thank you for watching this video. I hope your taxes are going well. I hope your learning of Schedule C and business tax is going well as well.